Chart of the emini S&P on February 2nd, 2016 in the morning. The market's been going down pretty heavily all day, and this chart is sped up to 10 times so we can get through it a little bit quicker, because it takes about an hour for this whole process, and we got it down to about 5 minutes. In any event, you can see here on the left side of the screen is the 5-minute chart, and on the right side of the screen is a longer term chart. And the reason we do that, you can see the oscillators on the longer term charts are headed down, and so we were looking for a sell, and you can see on the left side of the screen the market had gone below the Oracle band and then rallied about 25% of the way up, which is typical. Sometimes it will go to the midsection. In this case, it went to about 25%. But you have to understand that this is a pretty bearish day. The Dow is being down almost 225 points right now. You can see the green line turning. You can also see the green line here, or the dotted line, where the market had made a bottom. The yellow line, which is the medium line, has rallied as well, and now you can see there's the top, there's the bottom, and now we're going into to make a new low. So the green line was flexible enough and sensitive enough to come up to give you a sell line, as well as the yellow line. The red line, which is holding down sturdy, is letting you know the market's still on its way down. So these three indicators work really well together. A big note about the bottom part or the top part of the Oracle band. Typically when you bust that band, you can see it did it before on the left side of the screen. You can see the red dot. It will typically come up to the 25% or even to the middle portion of the Oracle band. So it did it there, and it did it again. So it does it quite often. Right now, you can see on the right side of the screen, we're looking at a 20-minute chart, and that is indicating the market's ready for some type of bottom. Also note that the market will tend to trade on these bands, on the lower part or upper part, either a bullish or bearish market. Now we're in a bearish market. You can see that the prices aren't going too much lower than where the bands are. So if you're looking for a grand slam, it's typically you're not going to get it. These bands will give you an indication of price and time. Now you can see on the left side of the screen, we have another set of green dots, which are the cycle low bands. They're automatic. So it looks like we just made another cycle low. We do have an upper trend band that it's going against. The yellow line is getting a little bit further up, about 82.5. So the market, in my opinion, would be slowing down. And that's exactly what is happening here. It did do exactly what I anticipated. After it broke the line, it come up, make a top, make a new low, and now we're against the upper trend line. And you can also see the D trend oscillator on the right side of the screen had gone to a point where it typically bottoms. So I would say that we're getting kind of close to a cycle bottom. The market's pretty bearish right now. I'm not looking to buy. I'm actually looking for the market to make another rally to set up a new sell. Again, this is 10 times the speed, so we're moving pretty quickly on the charts to save some time. But you can see how the indicators work in real time. This is what we do every day. We look at the markets. You can click on any stock or futures or currency, and you'll start seeing similar results. Stocks are really famous for having what they call gap openings. You'll notice they'll gap below or above these Oracle bands, and then typically run back into the Oracle band. So keep that in mind as you're trading. And if you have any questions, give us a call or email us. We're here to help. You can see the market's doing exactly what the indicators are telling us to.